Welcome to the Zacks Roundtable Review, a discussion of current events affecting investors as well as other topics of financial interest, featuring the analysts and editors of Zacks.com. Well, as the market struggles for direction, it also struggles to find a real catalyst that'll take it higher. We're going to see if our experts here can't pinpoint which catalyst that might be and when it might happen. We've got Research Director Shiraz Mian, Equity Strategist Tracy Reinick, and ETF Strategist Eric Dutram to try to provide us with the answers. Tracy, you say catalysts are hard to come by. Why?
Because there aren't any. Well, we're nearing the end of earnings season, but we still have a lot of small cap companies. I always hate it when they say earnings season's over, but that's only for the S&P 500 and the big caps. We have a lot of these smaller domestic-oriented companies that I'm interested in hearing what they're saying about what's going on in the U.S. Mm-hmm. So we'll get that, but it's not enough to really, put a fire under the market that much. So that's kind of missing. And then today we got a bad housing number with the home builders index.
Got a bad manufacturing number too.
Yeah, it was the worst plunge in the home builders index ever, but everyone's blaming the weather. But a lot of this, I don't know. There really isn't any catalyst right now. We're going to kind of go into that quiet period where everybody's trading on rumors and other things for a while.
Okay. Eric, you think that we've hit a speed bump in the market? That's like an understatement.
Well, I mean, we're still not down that much compared to, earlier in the year. So I really think it is just a speed bump right now. The data has been pretty poor. A lot of the emerging markets that have been weak have been smaller ones. And I think until we see some severe weakness in larger markets like China, we're going to be okay on that front. Not great, but okay. And in terms of earnings, I believe Walmart is actually reporting later in the week. So I'll be very interested to see what they have to say about the consumer, because consumer confidence was actually it beat the consensus last week, but things have been a little dicey, and jobs have been a little weaker, so it'll be very interesting to see what their outlook is on the market.
Shiraz, you pinpointed a little bit more. You think it actually hinges on the U.S. economy. And,
yeah, I mean,
we have to stop blaming the weather, right?
We have to stop blaming the weather. That's right. But it's the since we shoveled the snow this morning too. So February has been no better. And what this means is that come March, all the data will be for February, and we'll keep talking about weather.
Right.
So if March is cleaner, then in April we'll get March data, and we should start seeing confirmation of whether it was weather or not. Mm-hmm. And what this means is that the weather explanation will remain with us till proven otherwise, and seems like the consensus view is buying into that. Seems plausible as well, and that's the key reason why we have rallied back from the bottom. So.
Well, the market certainly, especially with the kind of negative economic news that you brought up a moment ago, Tracy, market giving the economy the benefit of the doubt here. But how much longer is it going to be willing to do that, do you think?
Well, I think it's going to take a couple months of, once we
At
get
least,
past
that's
the
right.
weather issue.
That's right.
And then if it's still an issue, then there's not going to be any other, excuse of the weather.
That's
and then
right.
people will start to be like, something else is going on here. I mean, the good thing is, if you want to blame the weather, January and February for the retailers that's their slow time anyways. Mm-hmm. So yeah, they might miss out on selling, some camping equipment and things like that they otherwise would have, but hopefully, spring always does come, and that people, are having the cabin fever. They will go out, hopefully, and start purchasing again coming, the next couple of weeks. But if we don't see that data turning, that's when it's going to get real iffy.
One of the things that bothered me a bit last week on the retail sales data was that the January data was weak because of weather, but they revised down December and November too, and we thought Q4 was very good. We thought the softness came in Q1. So if that is a sign of things to come, then we could be in trouble.
All right. So as far as the investor getting bearish, Eric, you really say that they're really taking a more realistic view here, right?
Well, it's realistic, and it might be a little too much fear right now. We've seen a little bit of a pullback, but it just seems investors are sort of freaking out about the mild losses that we've seen so far. So I definitely don't think we're going to see the 20-30% gains that we saw last year, and that maybe this year might be a little more typical of what the stock market is going to do.
Tracy, you think market's going to continue higher as long as the Fed, they get the notion that the Fed has their back still in their mind, but don't forget we've got a honeymoon period going on now with Janet Yellen. That's going to be over soon.
Right, this is the honeymoon, and then we'll see what they do at their next meeting. But
Yeah, we'll see if the punch bowl's leaking or not.
well, right, but for now, she reassured the markets enough in her testimony and everything that they're going to be there. If things get worse, they'll come back in with more QE, and that is what it still sustains the investors. They believe they're not going to be just left out there high and dry, that the Fed will come in there and do its little magic and make things okay again. So as long as that's still going on, I do think that's why the markets are going to sustain here, at least hold up near these levels, because people believe that the Fed will have their back.
Strauss, I'm going to give you the final word.
Yeah, I'm not as optimistic as Tracy and Eric. I think there is reason for investors to be, if nothing else, at least cautious. We didn't see any improvement on the earnings front, and if we don't see a continuation of what we saw in the second half of 2013, economically speaking, into 2014, then there's every reason for investors to be cautious and maybe lighten up on equities.
You think investors are becoming more demanding at this point?
They should. They should demand seeing an improvement in the earnings outlook. We're not seeing that. We haven't seen that for 6-7 quarters now, and Q4 was no different. Pretty much every company that beat and guided, as they have been in recent quarters, they guided lower for Q1. So yes, there were more positive surprises. Yes, the growth rate was a bit better, but we didn't see any improvement on the outlook front, and that's bringing estimates down. So if estimates are coming down, why so much optimism about the equities market?
That's what we need the answer from you for. Thank you all for that. We'll leave it right there for time. So there you have it. Still, with all that being said, still waiting for another catalyst to carry this market higher. One thing you're not going to have to wait for, though, are the top stock picks for this week. Better late than never. We'll have that in our next segment.